Private equity in action, not words. That's what RMB Corvest, which invests in well-performing, well-managed, medium-sized businesses, promises. For more on the company and its offerings, I'm joined by Mike Donaldson and Martin Coetzee, both directors at RMB Corvest. Mike, can we start off with the basics, if you will? What exactly is private equity and how does it work?
Private equity in its truest form is really risk capital. So we back operators, we back entrepreneurs and founders, and we provide and buy equity in the business. So unlike a bank, for instance, which would provide sort of senior debt or normal debt facilities, we actually become a partner and buy equity alongside the partners, and become a sort of a co-owner, if you want to call it that.
Becoming a co-owner?
Yeah.
Okay.
So a co-owner with share certificates, with equity, but it's risk alongside the owner. We don't have terms on our facilities, we don't have terms on our capital. We take the good with the bad, and we'd like to grow those businesses with the operator. We'll provide him more capital, but it's all risk, and we sit alongside him. So when the business expands and when it does very well, we'd like to think we get the benefit of that. But on the flip side, when things don't perform, we're alongside the owner, and that's where the risk comes in.
Now, in sitting alongside the owner and taking on some of that risk as well, Martin, how would you describe where RMB Corvest fits in within the domestic private equity scene?
I think the easiest way to answer that is probably to look at the size of deals that we typically target. We target companies typically with a enterprise value between 100 and probably about R1 billion. So we're not one of the larger players that you get around. So we play in that sort of mid-space market. That's typically where we play in the market.
Then when it comes to deciding which companies to invest, what kind of factors do you consider?
I think there are millions. There's a myriad of opportunities and a myriad of things that we look at every time we invest. I think it's fair to say by and large, private equities is managed by a lot of accountants in South Africa. So we're all number driven. So it's the economics that motivates us the most. But having said that, it's really the management teams. So when we look at a business, some industries are better than others. Some industries have got better prospects going forward, especially in a current climate we find ourselves in South Africa. So there are certain businesses and certain sectors that will do better. So that's what we look for. But the number one factor we always say is management. If you've got a good management team, regardless of the industry or the business, you can still do very well.
And one of the reasons you say you can still do very well despite the circumstances is because you use your own capital instead of third-party funds. Martin, can you tell us how this proves advantageous for the clients in which you invest?
So the fact that we have our own capital and that we're not a private equity fund, like most of our competitors, we have no exit pressures. So we can basically sit on an investment for as long as we'd like to, and as long as we feel that it's economically viable and as long as there's growth. So we only have to exit an investment once we feel the time is right, once we feel the growth opportunities start becoming limited. But also you always want to leave a little bit on the table for the next buyer. So for us, we can be very opportunistic, we can time our exits properly, and some of our investments we've held for a very, very long time. Some of them we've held for about 27 years. So there's no pressure on us. We don't have to exit within 7 or 10 years. And it just gives us the opportunity, as I say, to really, really timely exit well.
Which I think it takes a lot of pressure off from the owners in the business as well. So the management or the partners that we invested alongside, the last thing they need is to have a drop-dead date where one has to exit. So we can work with them, as Martin says, we can find the opportune time to exit. I mean, all of us in private equity typically want to exit at some point. Yeah. Having said that, we've got investments that we've been in for 28 years with like Fidelity. A fantastic management team in a fantastic sector and company. We would like to see ourselves there for another 28 years, but long after we've gone. But yeah, so I think not having exit timing pressures and a sizable fund, I think for us, a captive on-balance sheet RMB player is far beneficial.
Perfect. And in preparation for this exit, what kind of support do you provide businesses with during the investment term?
So I think some of our guys would say a lot, some would say probably less. But I mean, by and large, what you want to do is you want to prep the business for sale. So typically we'd get in the corporate governance. Generally, it'll be a family business. So quite often not, it's not up to scratch. Mm-hmm. So you would try and prove really, I think from a financial overview and financial controls, That's probably where we spend a lot of our time, making sure the financial systems are up to date, they're getting proper reporting, on time, accurate. And I think you build that with the operator over sort of a 5 to 7 year period. Go into different markets, try and expand the offering of the business if it's a very niche player, and really make it just more attractive for another buyer to come in. In South Africa, some businesses are sold between private equity houses. I think that happens periodically. But by and large, it's the trade players that will come in after a private equity player has been there for 5 to 7 years. And these are the things that they would want to see. They want an established management team with lots of succession, not just family owned, and a clearer path to the future. And that's what we certainly try and bring. Sometimes, not all the time.
Yeah. We try and corporatize it, but not over-corporatize it. So you want to make sure that the corporate governance is right and all those good things, but still it's got to be an entrepreneurially run business. You don't want to have too much red tape in the business. It's got to still make sense.
One thing you also mentioned is that you help those businesses grow and expand. For the clients that you invest in, the businesses that you invest in that wish to expand their businesses outside of South Africa, to what extent can you help them with that?
So, I think this is one area that we've been particularly successful with over sort of many years. So, if we look at Africa, for instance, if we look at the UK, I think certainly in the UK we've had a good track record of taking businesses offshore and helping them fund acquisitions that side. So, a lot of family businesses isolated in South Africa today, not sure how to access funds, they're not sure how to access those markets. So I think the experience that we've got and the contacts that we've built up over many years with the RMB group and with some of our clients has helped us do that. So, take for instance Servest. We were invested in Servest in South Africa for many years. We subsequently exited that a few years ago, but we are still very much invested with the business offshore, Servest in the UK. And again, took a direct equity stake with them there, helped them fund some of the acquisitions, assisted them bedding down those businesses. And I think just giving management confidence to go offshore, where again, they've got a partner. It's not all their risk. Very difficult for an entrepreneur to take his capital and find a home for it overseas without someone next to him to hold his hand. I think we like to think we've done that pretty well over the years.
And how does your partnership and support from the FirstRand Group enable you to do this as well?
So, I think it's more the access to the balance sheet. So, FirstRand has gotten I think their private equity teams and private equity businesses are well established. I think they understand risk, and this game is this is a risk-reward game. We play in the higher end of the spectrum in terms of lending, but they've been supportive. So, where we go for opportunities offshore, whether it's Africa, whether it's Australia, whether it's the UK, FirstRand or RMB has been very supportive. As long as it's done sort of measured and, there's a certain amount of conservatism that we apply. I think the bank has been very conservative, and I think it's proved well for us over the years. But yeah, they look for us to diversify, and we are trying to especially in the climate we find ourselves, we want to diversify even more, and that's what we strive to do.
In the current climate, how active can a business like RMB Corvest actually be?
So I think the business at the moment and the environment is very tricky. But having said that, I think there's still great opportunities for private equity players in this market. But having said that, we've had a fantastic run of sort of exits in the last 3-4 months. So we've just recently got out of Auto Trader, sold out a business called Chicken Management Services. We've got out of Quick-Hot, which is the geyser manufacturer. And there's probably about 2 or 3 more that we've managed to exit in this climate. And again, opportunistic, the right time and the right price. So I think from a private equity player, we are particularly active. We like to, we're continuously sort of looking to build the portfolio. It's not certainly about exits in this climate, and we'd like to see that we can certainly build a lot more in the years to come. Yeah.
Does the current climate also lend itself to building your portfolio as aggressively as perhaps in the past?
I think probably even more so. I think certainly in this climate with pricing starting to sort of track down a little bit, I think the opportunities become more attractive for us. So we see this market far more as a sort of an acquisition strategy than a disposal strategy. The fact that we sold a few in the last few months, I think some of those were in the pipeline for probably the better half of 12 months. But we do see, I think, that the climate for the next 24 months is very much on a growth path.
You also mentioned that ultimately the goal for private equity is to exit. How and when do you decide at which point to exit?
think most investments reach a natural time horizon where you feel now's the time to go. We also get approached quite often. I think Mike mentioned earlier that we're quite opportunistic, and we do get approached out of the blue by trade players, by competitors. So there's no set rule as to when we want to exit. I think you get to a point in your investment horizon where you just know it's time to go.
I think it's like any good marriage, you know. I think a lot of the things gel, and as long as the relationship is building, we typically will stay around as long as we can see it's beneficial for both sides. But like at any sort of partnership, eventually there comes a time where we think the business will be probably better off with new partners, with new blood coming in, and maybe a different vision. And that's where management would benefit from us also exiting. And in some instances it's the reverse, where I think the relationship is still strong. We're all still coming with good ideas and adding value. And those businesses we typically stay longer.
Mike Martin, that's where we'll leave it. Mike Donaldson and Martin Coetzee are both directors at RMB Corvest.